a wondrous day today. Let's go make sure you all can hear me. If you would go ahead and type the number 1 in the questions box to let me know that you can actually hear me, that would be stupendous. For those of you that are just joining us for the very first time, besides welcoming you here today, just to give you a little etiquette, 1 is yes, 2 is no. It's just an easy way for you to communicate without having to type all kinds of different things in there. Very, very good. Thank you, thank you, thank you all. I appreciate it. Hear you loud and clear, Thomas says. Very good. A lot of 1s going in there. Let's see. All right, fantastic. So Joseph says, hello, Rob. I hope you're doing well. Received the FIB DVDs last week. Started watching them. Thank you. You're welcome. Let's see. Paulo. Hope all is well. Getting better little by little. Okay, Paulo. Good. Glad to hear it. Excellent. All right. So, guys, let me go ahead and go through our stuff here. All right, so upcoming workshops, guys. I got Monster Market Movers coming up on March 31st. And next steps, I'm in Charlotte and Fort Wayne, and hot off the presses, I am also in Baltimore, Indianapolis, and Cleveland in April. I just got the schedule as we speak. I just saw it come across my email. So I haven't looked at my email in a couple hours, but as I turned it on before getting started here, I just saw it. So we've got those classes. Coming up, we've got the 2-day Traders Camp, March 29th and 30th. That'll be in Atlanta. Probably the last one we do there. I'm looking for another location to do the next one. So if you're looking to get there, guys, it's a good idea. Besides, the next one isn't until June, so it's probably a really good idea to start planning now. E-mini Trader Talk every Monday night, except for tonight. Guys, I'm actually headed out of town. I've been trying to finagle a flight. I couldn't get on an earlier flight today, which would have put me in Texas early enough for me to teach tonight. It was just impossible. Couldn't get it done, so there were no seats available on the flights we were trying to get on. So that Trader Talk and email went out that it was canceled. On-demand workshops, got Monster Market Movers available until March 23rd. Power Hour, here you are today. And tonight, Bill's doing a free 2-hour workshop, guys, called Options 101. You definitely want to go and check that out. Great workshop, what he's got planned for you guys tonight. I've seen a little bit of what he's going to do. You're going to be impressed, whether you are experiencing in options or newer to them. It's going to show you some ways to really speed up your options trading. All right, and then let's go through our disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything you like here today, my suggestion, just paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now keep something in mind. Because I am not an advisor, that means I'm not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right. Excellent. So let me just escape out of that. Beautiful. Let's see. Paulo said, is there any planned class for the market inside the traders chat? I've got it. Now that I've got the April schedule, Paulo, I can set it up. I didn't want to do it since there are actually so many classes and so many next steps scheduled in April. I think we got 5 or 6 of them scheduled there. I think it's 6. I needed to get that scheduled first, so I will get that out to you guys, Paulo. I'll see what I can do about getting it out over the weekend. Scott says, advisors wonder if they are learning to be taught options yet. Yeah, good guess. Yeah, Debbie, I received a text. Guys, Debbie said she didn't receive the notice for it. I received a text message that came across because I'm enabled for text alerts. And then I also received an email message telling me that it was canceled this evening. Sylvia sent me a message saying that everybody was notified. So I'm glad you're here, Debbie. So Kay, can you do me a favor? Can you go ahead and make sure that everybody from tonight's class knows that it's canceled? Scott said got both text and email. Okay, so don't really. Rick said the same thing. So got both text and email. Okay, so Debbie, not really 100% sure. Maybe went to a spam. I'm not 100% positive. But Kay is going to confirm that. Dennis said the same thing. He got them both. So not sure. Sorry about it, guys. I dragged it out to the last second, trying not to cancel it. But hey, if you guys want to come hang out in San Antonio tonight about 10 o'clock, in San Antonio, I mean, we could talk there. But all right, cool. So, guys, let's go take a quick look at what's going on market-wise. Let's go look at SPX. And you can see dotted line is today we took a gap down on the open, which is normal. You're going to get gaps all the time on the opens because they do not, there's no overnight trading here on SPX, unlike the E-minis. So we got the gap down. We came back up and filled our gap right in here. This wick filled that gap in. So it was the closed window, came back to the moving averages and just kept pushing from there. It's been a kind of a choppy type day. I'll show you the one entry that I did get in there, and I'll let you know what's going on with that. But that was on YM, not on the SPX. But same thing, same idea, same concept in there. So let's go ahead and guys, tell me the symbols that you want me to take a look at. Just so you guys know, I am going to finish about a few minutes early today because I have a meeting that I've got to get to about the meeting I'm going to tomorrow, right? I love corporate America. Yes, Debbie, that's exactly why. I would have went to your husband's. That's right. That's why you wouldn't have seen it. All right, so Joseph said, Tesla, please. It crossed the 618 this morning. Now what? Okay, so let me go ahead and bring up a chart of Tesla. And let me get my tracking sheet from yesterday. Tesla, we said bullish with a pullback to the 8 was the note yesterday. So let me maximize the daily chart. And I'm transitioning everything over, guys, into my e-signal so I can just be using the one program here. So I'm just not going to spend the time and draw everything in one shot. It's way too many hours of work. So I will just be doing so each time I pull a chart up. We'll be doing that. Let's see. Okay, so there's our Tesla chart. Let's pull it forward a little bit. And I'm going to automatically extend the lines. All right, so they keep pushing forward a little bit. So here's what the comment that Joseph was making was we pushed above the 618. Now what? Okay, so Joseph, we've got a couple things right now. First off, the very first thing to remember is we didn't close. So there's a daily chart with today being an intraday 204.30 is our fib level, right? 204.3. So if we realign this and come here to the 5-minute and go to 204, it says 58, doesn't matter, but we're just going to edit it. It's easier than trying to make it exact. So we're going to change the price to 204.30, right? And we snap the horizontal line in there. So that's the intraday line right in there. So I wanted to do this, Joseph, because to see if there was any correlation to this 204.30 level, which is this purple line here on a 5-minute chart. And you can see that the high from Friday pushed right into that realm before it failed. It's funny that that's what happened on Friday when the daily chart had that, and you can see the daily bar of it, but the daily chart has been there to that level, hesitated and failed from it and closed just shy of it on Friday. So first thing today is we didn't close yet, so we don't know what's going to happen. If it comes back under the 618, it's awesome because that was a 15-minute that we're looking at? Okay, yep, thank you. So let's see, well, let me paste. All right. So I can change that to 204.30. Same concept. No matter the price of it or not, 204.30. I mean the time frame. But it was a good catch, right? So we pushed right up into those highs right there is where we failed, and then pushed up to it today and broke out above, right? So on the daily chart, we're not closed yet, so it really doesn't count. That's number one. Number two, let's say for argument's sake it does stay above. Joseph, if it stayed right where it is now, about here, and we get back under the 618, that's awesome. Great setup. I wouldn't, put a lot of, taboo on it because it wasn't a perfect setup for the H, and that's kind of what we're setting up for, is that H pattern. Again, I'll draw as best I can. Let's try color, then yellow, then blue there, then that purple. So there's the H setting up, right? As it came down, here's the leg down. Again, it's a live chart, so it doesn't allow me to draw a line and leave it on there. Comes up to the 618, we're looking at the rollover, right? Off that 618. So Joseph, if it does that, fantastic, everything is great, I love it, we'll go with it. If it doesn't, if it keeps pushing higher and stays between the 618 and the 764, that is called a potential Fibonacci 4-step. Right? And then if it gets above the 764, we've got a Fibonacci 4-step in play. As long as it doesn't get any higher than the 882 level on the closing basis, then we're okay. If it goes higher than 882, and closes above it, that's where we start to run into the problems. Right? So if it gets above this 882 on a closing basis, then we failed. If it comes up in here and rolls back over, then we've got a better shot at a potential bearish trade, and that would be from the 219 down to 204. So come up in here and fail, get back under the 764, look for the move to the 618. If it rolls over here, then Joseph, we'll just look for the bearish trade to the downside with a 2 standard deviation move, 192 and 180. So 24 points in total if we do fail, which is pretty good when you think about it. Let's see. Hopefully that helps. All right, Debbie wants us to take a look at ES. All right, so guys, same thing that I have done on the YM, I'm going to do right here, and I've got a rectangle drawn on the YM. The YM is the Dow, the ES is the S&P 500. And you can see right here was the time where most of you would have been looking to trade somewhere after there. And we got this great breakout right on the opening candle. I wasn't looking at ES this morning, I was looking right at the YM. But we got this great breakout this morning. And the thing I like about it is not the breakout. That's tough to take on that 5-minute candle. Even if we go and look at a 1-minute candle here, and let's see if we can get back to the morning. And we look here at right at 9:30, right? That candle is the whipsaw that took place, that doji type candle. Right in there, so it puts us a high to low of 1 3/4 ticks, right? So 1.75 move, which is 1 3/4 ticks. So, and then from there made a nice move up. I like the retest on the moving average. That to me was a better entry on the retest in here. But a lot of long wicks in here, ups and downs, which is my reason for not personally trading as much on the ES, is you get that regularly, a little less on the YM. But the whipsaw is just a little too much for me at times. I don't like the bigger stops I need to put in for my style of trading. But it was a nice stair step up. But if you look at this move up right here to, let's see, 94 3/4. We move down on this red candle to 90.5. That's 4 1/4 point move down, right? Which is a lot of ticks. So we would probably not still be in that trade with that kind of pullback. And same thing with this move up here to 38.5, 98.5 we'll call it, and then the move down to 92.5. You got 6 points, which is a 24-tick move. So a little bit more volatile. Yeah, Debbie said very choppy today. It is, Debbie. It's a day to consider. You know, if we go to not YM, but if we go to the tick trend chart, it's a day to consider tick trades. But even there, you're looking for a tick trade, ideally where we get a pullback to the minus 1,000, and we have not had that happen. Let's see. It's the beginning of our day right here. We've not had a minus 1,000 all day. We've had one plus 1,000 and was not a very good trade. You were potentially stopped out on that as it pushed up here. Next candle opens up down, and we still climbed, right? So that would have been one we were stopped out on. So it's not really making its move up, and you can see the ticks are starting to drift lower in here, but even the tick didn't give us a great setup to work off of today. So ES itself, when we look at the daily chart, we're pushing up right now, right to that 2,000 level, 1999.25, right? On SPX, when I went over it in the Market Insights, we closed on Friday at 1999.99. Talk about right there. We were right there. So that dotted line is that 1,000-point, 2,000-point level, 100-point increments, and we'll be duplicating that line. We can actually do it right now. And then we can go and edit it and just change it to 2100 and put another one in there because we want them at every 100-point level for the S&P, right? Whether it's ES or SPX, doesn't matter. Okay, so Debbie, I'm watching that 2,000 level, and it's pressed up to it now 2 days in a row. The question is, will it actually break above? If it does, we've still got 2011 as a resistance in there. If it pulls down, great confluence at the 618, which is the fib line plus the 8-period moving average right there. All right, let's see. Denise is asking for Disney. So let me just switch charts here. And let's go to Disney, DIS. So let me just switch these around because it's driving me nuts. I'm just so used to on my laptop now, the 5 is in the middle, and the 15, it was always in order, 1, 5, 15 daily, but I'm going to flip-flop them just to make it a little centered on this screen here. So we look at Disney. We look at Disney, we've got, let's see. Well, that's the 5 minute. Let's go look at the daily first. All right, so you can see the move down here, good strong burst, thrust to the downside. We had another strong move up and then a fairly strong move down. Look, a couple little hiccups in there, which I'm not a fan of. It looks like bottomed out now. We've got the moving average cross. So let's go draw from this high down to this low. Okay, so where are we right now? Well, we're going to pull this out a little bit. And let's extend. Okay. That's better. All right. So we've pulled back up to the 382, which is about 99.25. Is that 382 level? So Denise, there's no strong moves at the 382 to be considered, right? And because the 382 is not a strong fib line. But the one thing that you should be cautious of here, if you're considering a bullish trade, is we've seen volume drop off dramatically. And I don't, yes, that spike has something to do with it. Volume is less, and that spike was right here on this day. Next day, the good push up, same thing, that green candle right here was still decent volume above the moving average, but we've seen very low days in here of volume for sure. So definitely something to be cautious of. On this bearish move down, ideally, I'd love to see it settle at the 103.5 level and fail, or at the 107.5 level and fail. And usually, whichever one of those two lines it tends to settle at or near, we usually get a move to the downside of about 2 lines. So whichever one it closes up to, that's what we want to. Okay. Yeah, I got a couple of you asking about Alcoa. That's interesting. We'll definitely get to that one. Sorry, Brian, I didn't see your comment there. Funny peculiar or funny haha? Just because I got to keep flipping up and down to scroll up the screen to see the questions. Okay, so hopefully that helps. Let's take those down. On an intraday chart, you can see it's had a nice little burst up, and it's that chop again. It's just not a pretty pattern. Their intraday, it just seems to get a lot of chop in it, at least for the last 2 days I'm looking at. I don't trade Disney a lot. All right, so let's put that one back. Let's see, who's next? Okay, Alcoa. Rose was asking for Alcoa. You're welcome, Denise. Someone else put it in there. Michael asked for it, and there's a few others, so I apologize if I didn't call your name off. Right, on a daily chart, $10 stock, and let's go ahead and do this. Let's go ahead and insert a study. Let's go add average true range. All right, we'll put average true range in there. Let's go edit this. Old school. I'm used to volume being the lower indicator set. So I just want to switch that around. So we've only got 47 cents is the intraday move from high to low. And this average true range, although it just says average true range, guys, I did the math, not on my own because someone told me to. And it's really Wilder's average true range, which means it incorporates the gap from the previous day. So it's programmed as and written as average true range, but someone that used to work for them that's helped with some of the programming did the analysis and told me that it's actually Wilder's average true range. We did a check ourselves and show that it actually was. So you don't have a very big move in here as far as potential for it, right? So let's see. Let's go in, meaning daily potential. So if I were to draw the fibs, I like the strong move in here. If I were to draw my fibs, what happens? If I come off of these 2 points right in there, that move's already over, right? We pushed up to 764, and that move is pretty much done. I don't have a good ending point here yet, so I'm not able to draw another fib on this daily chart yet. I will be once we fail, and I don't want to really count any of these chops in there as fails. That's all it is. It's just a little bit of chop. So Rose said Alcoa crossed the 200-day moving average a few days ago. Let's see. I gotta be careful here. Still used to extreme charts. I'm hitting E for edit. So let's go ahead and let's insert another study on this one. And we'll do moving average. and then let's go edit it. Let's go take a look at where that 200 would be. So first thing we've got to do is turn it from an 8 to a 200. That's my standard as it comes up as 8. Turn it into a white line, and we would want to make it simple, not exponential. Okay? So there's the 200 EMA, 200-day moving average. Right now, if we go ahead and highlight the fibs and drag them out, I was curious if we were going to intersect on that 764. Not quite yet. So guys, I don't use the 200-day moving average. I use a 233 for me personally. So I would say, you can keep your eye on both of them and see what you think. But right now we have violated that 200. Big picture, big time frame. One of the things I do notice is for Rose, Michael, all of you that looked at this, the average true range is increasing nicely. So we're getting bigger ranges throughout the course of the day. Granted, 47-cent stock on a $10, 47-cent move on a $10 stock. So 50 cents on $10, you're looking at a 5% move a day, which is not horrible as far as a move. It's just tough at 47 cents to get a lot of legs behind it. I like stocks like this for covered calls and such if I can get them. All right, but this one for me, 233 is the one that I like to use there. All right, let's see. Scott said, played the YM at 10:03 today through 10:57, $420 trade. Awesome, Scott. Great job. Congratulations on that, my friend. I'm excited to hear it for you. Cool. Cisco. Bruce wants Cisco. Oh, there's no S in front of Cisco. So just going to uncheck that. Okay, so I just wanted to hide it, the 233 there. So here we have Cisco. We're on our daily chart. Let's go ahead and draw some fibs on this. First thing I see is right from here to here. So from this top down to this bottom, and we have now since violated the 764. Let's pull it out a little bit and let's do it this way. All right, so we're just kind of hanging out in there. So, Joseph, when you had asked before, I forgot what stock we were looking at, Tesla maybe, I don't remember now, and I said we were looking at that Fibonacci 4-step. Here's the close above the 764. It did not get above the 882, which would be right here, up to this candle. It came back down. You take the bearish trade from the 2651 down to the 2573. Boom. That's a great setup in there. You're quite welcome. So Scott said, Scott, you're tweaking the double Dan band, Bollinger Band trade setup in there. I'd love to see what you're doing for the tweaks. Maybe next week you can, type it into the text out. What's going on with that? What are you seeing? We'll do. Excellent. Okay. So where are we? We're back on Cisco. All right. So when I look at Cisco, I see all this sideways move going on, Bruce. So that concerns me a little bit. We were at the moving average today on the open, and we took a little bit of a bounce. We do have a 60-cent intraday move. We were up near 80, dropped off a little bit, obviously, at this point. But we were up at that level. I see which I haven't seen a lot of this in a while, guys, but my box of neutrality, as I like to call it, just this rectangle, this sideways move into Yuckville. Let's see. Yeah, let's pull it back to there. Excuse me. So we've been in there. I would like to see, Bruce, that breakout that happened today. I'd like to see it stay there. And if it can, great. maybe come back and test the box and bounce. Even better if it can come back and test the moving average and bounce. I would like that, but either one of those would be a potential trade. I'd look at that 27.77 level to the upside, which is part of our problem. We only have 70 cents, right? And then from there, if it continued higher, we don't have a new fib in place, but we're looking right about at 29.5 level-ish, right? Multiple hits right there. That wick was really close right up in here. Cool, Bruce. Okay, good. Let's see. So that was Cisco. So Bruce said Elon Musk owns Tesla and SpaceX is one of the reasons for the dip. Yeah, it's just when you look at Tesla, right, to see that we were at $280, pulled all the way down to 140 on that. I mean, it's a brutal hit for any company. I mean, those monies are so important to the price of the stock. The monies is what I mean. So important to the company itself. This is what they use, this cash, the stock, the value, they use that for leverage. They use that for buying powers and such. So, you know, having a big drop like that in price hurts them internally as well. They can bank on those monies. Okay. Let's see what the next one was. So Bruce is also asking about flow. So he said he's concerned about this one. Well, I mean, Bruce, here's the thing. You've got various types of gaps that can take place on a position, on a stock. You've got a gap and go where the stock gaps and takes off. You've got a gap that's, you know, a reasonable gap that tends to fill the gap before continuing. So we gap up, we come back down, we close the gap, and then we take off again, right? And then you've got exhaustion gaps that kind of run out at the end, and usually you will get 2 to 3 gaps before an exhaustion gap shows its pretty little head, right? So what happens here? We get this nice gap down, and it was a gap and go. It gapped to here and just went. We went sideways to the moving average, we came down. We went sideways to the moving average, and we floated sideways before we failed. Floated sideways. I don't know if this was their earnings date or not, very possibly, that was earnings for them. And if it was, it wasn't good, right? But there was our next gap down and the pullback up. So first thing I want to do is measure the fibs from that top to the bottom, to write down that red bodied candle, and see we've got a very small dollar amount in between there, which for me it's too tight. I wouldn't be able to play this one. It just doesn't fit, you know, my criteria for me anyway as a trader. It doesn't. So you know, as we look at it, though, we look at the numbers. I would be looking, so going back to your point, Bruce, on flow, on FLO, about being concerned about it, I would tend to say I agree, you know, from the concerned standpoint. So what I would be looking for, Bruce, if you're looking to take this trade, I'd look for the move up to the 50 or the 618 and a failure at one of those two levels and the bearish trade to the downside. Right now, for me personally to say, yes, I'm going to take this trade, I would need the 8-period moving average, the pink or purple line, whatever it is here, to cross up through the yellow, which is the 21. Then and only then would I take a bullish directional trade. Other than that, I'm really not interested in it at all. And you know what we're going to do here, guys? We're going to go back in and edit this chart one more time. Let's go to that other moving average I had there, and instead of it being a 233, let's turn it into a 55. All right. So I just wanted to see the overall because I do use 55 on my daily charts. So I'll save this one on here for now. And that 55, we're up nice and high. We haven't crossed that. The 8 hasn't crossed through the yellow. So I am not at this point bullish, but I would look for that natural reversal that takes place at the 1844 and 1911 level, which are those two key fib areas. So Brian said, yes, it was earnings. FO was minus 27% surprise on February 10th. That was it. Brutal. Okay. For some reason, my charts just hiccuped. Don't know what that was. All right, you guys showing I'm still speaking, so we should be good. Bruce said, so the company is seasonal. I don't even know, Bruce. What do they even do? Flowers Foods, so a food company. Well, I mean, yeah, food can be seasonal. Breads and cakes. Well, Bruce, that's seasonal to me. I eat that every season of the year. Every season, every day of the year would be bread and cake would be a good season, right? Actually, I don't eat them anymore. I would love to eat them every single day, but from a flavor standpoint, how about that? He says, yes, capital letters, carbs, baby. Yes. I'll tell you what, guys, recently my carbs have been almost completely fruit. I am on a very big move towards much higher fruit levels than I was told. My doctor, when I first found out I had diabetes, told me, you can have 17 grapes and that's a serving, and then you can't have any more. You want more? Wait until your next meal. You can have 17 more. Like, really? And my breakfast in the morning consists of, I'll give you an example today, half a papaya, a banana, an apple, a pear, and an orange. And then I had my green smoothie as my snack. And then I got this huge salad sitting there waiting when we're done with my next meeting. But don't get me wrong. Don't get me wrong. I would kill to get some bread in there. There's a loaf of Ezekiel sitting in the refrigerator that my wife keeps telling me, go ahead, you can have it. It's all sprouted. 4 years, Patty. 4 years. Okay, so Yin is asking, which moving average do you have on the chart, 21 EMA or 11 EMA? Okay, so Yin, if you look in the upper left-hand corner here of the chart, the 8 is pink, the 21 is yellow, and the 55 is white, and they are all exponential. All three of them are exponential. Oh, I'm sure I can eat the Ezekiel bread, Debbie. I'm just trying to stay away from any kind of carbs from that side. Here's the thing. If it's okay to eat Ezekiel bread, it's okay to eat pizza in my mind, right? So if I just stay away from the bread, I'm much safer. You can try flaxseed bread, no taste, but it's doctored with herbs and butter. Yeah, no more dairy for me. I'm trying to stay away from the dairy, the eggs, the meats, all of it. Limited chicken. Yeah, Debbie, most of my carbs are fruits right now, and a bunch of veggies. Oh, it definitely has, Patty. Yeah. Thomas says, good for you, Rob. But I was bad. I would do the donut shop. I understand. Why no dairy? I'm just trying to stay away from anything that's an animal-based product, Debbie. That's all. I find that I sleep better at night. Well, Scott, I understand. Scott says I need some dead cow. I got it. Scott said I couldn't give it up. I said that too. I gave up, meat, red meat, beef, pork type meats 5 years ago. Chicken, I still eat, but just less. Yeah, I've got the book Wheat Belly, Scott. I've read it 4 times. It's a great book. Better recently is the starch solution I think it's called Start Solution, is one of them that I'm reading now. I'm actually reading 3 books at the same time. The Start Solution, 80-10-10, and the China study. China study comes with me on a plane today. By McDougall. Yep. Yep. Okay. So let's back up here a little bit. I think I might have missed one or two. Let's see. All right, then Amazon. That was Brian was asking on Amazon, right? So let's see. Let's kind of pull that in a little bit. Oh, I love that one, baby. I gotta tell you, I do. So let's go ahead and draw the fibs on this one. Man, look at that. Okay. So you can see where the failure took place. Right at that 618 was our failure. We already had a 1 standard deviation move today, right? We got down near that 556.32 level on that wick. So what a great setup to the downside there. So, you know, it's the H pattern, Brian, right? So let's see. Once again, I'll do the best I can for drawing it. And here's the leg down. Right, the leg back up, that reversal leg in here, and now we're looking for the failure right in there, okay? So that 556 is definitely a target, and that 537 is the next one. If it does break to the upside, it's okay. I'm already out of one of my exits. Getting in at 575 and out at 557, 8, 9. It doesn't matter. 560, you still had a 12, 14-point move to the downside there. So excellent setup. Thomas said a pullback all the way to the 20. Thomas, I think if you're referring to this chart, because again, I don't see it because when there's 200 comments on the page, and I don't read all of them, that if they're personal, I don't read them. Right? There's some that say don't read this out loud. So I don't know where you said it, but if it's the yellow line you're referencing there, Thomas, it is 21, not 20, but yes, you're right. That was all the way back to that. And the funny part of it, and I don't mean funny, but the interesting piece to that is there's a confluence around that yellow line and that 50 percentile level as well. All right, so good point, Rick. Tesla's afterthought. Interesting that the pullback went from 280 to 140, exactly half. Right, so if we go back to Tesla again, and you take the big picture from its high to low, right, and draw another fib, and I'm actually not going to draw this one all the way through. I'm going to draw it back to, I'm going to set this up at 140.96. Close enough right there, right? It's not really where it belongs, but it gives me the bottoms lined up in the same place. This pullback to 208 right here, 209, whatever it is getting me right back into that 50 percentile reversal as well. But when you look at that move down, right, you're looking at that 140 points, 145 points or so. So we dropped all the way down to about half of where it was, 50%. It's just funny how that stuff happens, Rick, isn't it? Let's see. Guys, I think I got all the symbols out, but let me see. I know someone had said something about ammo. I don't even you, Jeff, but that was one of the newer ones. So Michelle says, Rob, can you show us some of the ones you trade? Yeah, Michelle, for me, I mean, I trade the Googles of the world. I love Google. It's a great trading stock. I've got it down as a day trade for obvious reasons. When you look at it, it's ugly, very ugly, right? But what a great setup today as far as day trade goes. Right, you had that nice gap down, and it just ran and ran and ran and ran. It stretched back up, and it couldn't fill the gap, but it tried to get back up to those lows in here from the end of the day. But if you look, lots of support right in here on a 5-minute chart. Right about there. Oh, okay. So we had a lot of support from that level here from Friday's trading. We gapped down, pushed up to it, failed, and there was a great entry right on that first candle. Was a little expensive on the bid-ask spread this morning, but for the options. But also that's why I like the E-mini so much, as we get away from the expensive part. Let's try to refix that. Okay. So Google, I love Tesla. Michelle, I love LinkedIn, Apple, Amazon, Priceline, Baidu. I'm a big Biogen, B-I-I-B fan, right? It's one of them. I like the spiders. Not as big of a mover, but still pretty good. Amgen's a decent mover, not great. Goldman Sachs, we trade that in the market insights, but it's not my favorite stock to trade. I like some of the others better. I really enjoyed Caterpillar when it was a little bit higher. It's just a little too low right now. Let's see. Brian's saying that there's a carb-free pasta called Dreamfield. We actually had a pasta made 100% out of edamame the other day, and my wife put tomato sauce on it, and because we do a lot of spiralized zucchini for pasta, and the texture is not there for me. The edamame, not only was the texture there, it was so heavy, it was like you ate regular pasta. You were full on a bowl of pasta. Let's see. Start solution. Yep. Okay. Forks Over Knives is a great video if you haven't seen it. Where would you draw the fibs on the YM daily? That was Jeff. Okay, I knew there was something there about YM. On the YM pound F chart from, okay, so Jeff, I'm just going to show you where it is. This is where we've got it drawn from the E-mini think tank. Right, so we've got it drawn right here, Jeff, from 229 down to whatever that low was on Jan 20. So yeah, that's exactly where you've got it, Jeff. That's where we've got it. So you could see we had it drawn here earlier, and then it violated the 764, and then this new run just became a more prominent, close to the right side of the chart. So the emphasis has moved to that one. Okay. Don't know where you said confluence there, Denise, so I missed it. Sorry about that. Again, I'm trying to catch them all, guys, but that was a couple minutes back. Rick, I don't follow anything with iron ore in China, so I can't really state why. I do know that for many years, China and Russia dumped steel on our country. There were embargoes against them because of it when I was very heavily involved in steel purchasing. Yeah, Scott, we bought that pasta at Costco. Let's see. Brian said, do you like to sell credit spreads on Google and stocks with big prices in the options? Yes, I do like that. Very much, Brian. I like to sell credit spreads on them. I'm not a debit spread fan. Bill does a phenomenal job with debit spreads. I do better with the credit spreads. But, you know, stocks like Google, I've gotten good at charting them. I do better with the directional trades on those bigger stocks primarily because of the moves. So I tend to use my credit spreads on other positions. So Jeff said, so you went off the low wick even though it was still heading down versus the 121 candle. 121 candle. So we went off of the 120 candle, Jeff. Maybe I'm not understanding what you were saying there. So you went off the low wick even though it was still heading down versus the 121 candle where it starts to retrace. Yes, so Jeff, we couldn't, I get what you're saying now. We didn't draw this fib until after we had already bounced, right? So probably once we got up about here is where we finally drew that line, you know, the fibs from this top down to this bottom. Right, so we didn't draw when we saw that. We had to wait for the V, and this little candle here didn't really give me a V. If we had continued to move down, I would not have counted that. It would have just been a continuation. So that move in there kind of made it the V. Okay, Jeff, by the way, I did get that paper that you sent me, and we are going to make that part of the bonus materials in the think tank. I appreciate that. Jeff went ahead and took every one of the exchanges, for those of you that are in E-minis, and he listed out every position that trades on there, the symbols for him. I haven't looked at the document. I saw the email that came through, and his suggestion was to put it as part of the bonus materials for the E-minis, and we're definitely going to do that. So that was awesome. Yeah, Rick says nice. Yeah, thanks, Jeff. It's helpful. I mean, it's something I didn't have to do, right? That someone else was able to do, and I'm sure you did it for yourself, which was awesome. Now you've got everything there if you want to see it. Yeah, I said I found it helpful and thought I'd share it. Yeah, no, it's fantastic. I do appreciate it. All right, so ladies and gentlemen, we're good here. It looks like. Yep, I hear you, Scott. I hear you. I do. So you guys are welcome. Robert, good to see you, my friend. So here we are, ladies and gentlemen. You are all very welcome. All the thank yous coming through. I appreciate it, guys. So, guys, if you're interested in what we do in the E-minis, go and check it out. Come on in and hang out with us. Guys, we trade these. I know last week we had a couple people in there. You know, we get the questions in here all the time of, you know, how are you doing on this? What are you trading on that? Debbie is the one that asks a lot of show me the ES or the YM. And last week we had people, you know, making a couple $100 inside that think tank at night. So multiple people saying, I made this, I made this. Now let's assume it's all non-funded for now, all right? Because I haven't seen anybody's brokerage statements. But yeah, but if you're interested, come on and hang out with us for a little bit. All right, ladies and gentlemen, with that, we're done. You have a wonderful day. God bless, and I will see you next week at the next Power Hour. Take care, folks. All right, bye.